Hello traders, this is Kevin Loughlin. I am a harmonic counter-trend trader, and as the name suggests, I use harmonic patterns in my trading. I also use Elliott wave principle, and I inform my trading decisions with elements of classical technical analysis and Japanese candlestick patterns. This video will look at 4 currency pairs, 2 of which I am involved in, and one which I'm just looking at, GB pound against New Zealand dollar, and one which I wish I had got involved in. And we're going to begin with the Aussie dollar against the Japanese yen. And what we have here is a classic Gartley pattern. So we have the X, A, B, C, and D. We've been looking at this. I've mentioned this in previous weeks and in previous videos. And what I liked about it was the fact that the B point here has made quite a nice 618 retrace of XA. The C point's done a nice 618 retrace of AB, and this can be classified as a 222 Gartley or a classic Gartley. Often Gartleys are predicted to complete around the 786, but many times I have seen them completing around the 886. And what we got here on the RSI was an overbought situation, and shortly after that we end up with some divergence with a nice shooting star. In an email earlier today to subscribers, I described the second half of this position being taken out break even. I made a mistake and I apologize for that. In fact, the second half is still open. I got involved in this around the 8228 area. I set my target one here from the D point to the C point in terms of a 382 retrace of that line. It has hit target 1, and the second half position is still open. So it's hit target 1 for about 160 pips profit. Potentially this might come down to the 50 retrace of DC. But obviously it's hit the B point, a significant historical structure, and decided to rally after that. So I say this trade is still open. We could be looking for some more profits down into here, the 50 or the 618 retrace down here. Okay, so the second pair I'd like to look at is the Aussie dollar against the US dollar, and I'm involved in this twice, if you like. Again, I've been looking at this and describing this in videos of the previous weeks, and because it has quite nice Fibonacci relationships within this 5-pointed harmonic Gartley pattern. We've got just beyond the 618 retrace here for the B point of XA, a 78.6 minus, so it's just shy of a 786 retrace of C. I got involved in here about I think it was about 587, so I'm around about 126 pips in pain actually on this one, so I'm suffering this one a little bit. I decided to get involved again because what we got was some nice divergence on the RSI here, where the value of the RSI is not congruent with the increase in the price value here of this pair. We got some confluence in terms of structure as well as the RSI indicator, and also the harmonics are good in the actual harmonic pattern itself. So we can talk about confluence as well in terms of different elements of the trading plan, the indicator, the pattern, and also of structure. So it's came up here to try and challenge X, which is significant resistance. You could say it's a double top. Didn't quite make it. Come also up into this upper channel line here, upper trend line of this rising channel, which will form resistance. And so I'm quite hoping this is going to come down, drop down from my entry point, which is up around here. And I'm looking for about 300 pips profit from that second trade I'm involved in this pair. And again, hoping it's going to come down here and probably give me about 106 pips profit off the first trade I'm involved in. And then if it breaks that point, we've got structural significance here as well. At this is a 382 retrace. Target one's a 382 retrace of DC, and it coincides with the B point here. Just above it. That's quite a safe place to be, being above the most recent historical structural point. Okay, so that's ongoing. One I quite I found I didn't get involved in, and I wish I had have. I just simply didn't see it. And this is another bot pattern. For me, this is bot pattern because we're closer to the 50 retrace for B of XA than we are to the 618. Some definitions would describe this as a Gartley as well, but I follow the Scott Carney definitions fairly closely, and I would describe this as a bot pattern. It's come down into a 618 to a 786 retrace of C for C of AB. Again, it's virtually turned on a dime here at the 886, which is the classic PRZ zone, potential reversal zone for a bat. And this, in fact, it's formed this bat on the daily. It's got nice divergence here. Price has come back up for a retest. I would, if I had got involved in this here, around this area here, which would be the 886 to 374, say 370. And coming down to 164, say 170. You know, there could have been 200 pips profit in this one, a target one for this. Interestingly, this depicts the fractal nature of the markets in that we have this large harmonic bear bat pattern. But also, if we look at the 4-hour chart for this one, we see quite a nice. We have this Elliott impulse leg, and after an impulse leg, at some point we're going to get a significant correction. That's often where these harmonic patterns give us the profits in the correction. And this pattern here I would classify as a Gartley pattern. It's beyond the 618 retrace of XA. It's not very close to the 786. We've a 786 minus retrace of AB for C. It's formed a nice shooting star here. We could see this coming down into that target that we'd set on the daily, if not further. So here 382 retrace of DC, and I think that could happen. So obviously this little pattern here might extend beyond itself. So if that actually did do that, and say we did a DA sort of extension and just expanded that a little bit to have a look at it. Yeah, so we're coming in here, it's beyond the 382. If you can remember the 4-hour Gartley, it could come down beyond the A point here, which is be here on the 4-hour Gartley, and the 382 161. So I could see it actually come down here, but I said I didn't get involved in it. I'm not going to chase the market. It's not part of my trading plan to chase markets. I want to be predictive, and I don't want to follow after a market has decided to move after completion of a pattern. Now the other pair I'd like to look at in this video is the Great British Pound against the New Zealand dollar. Now this is a daily chart, but what we have here is some significant divergence taking place where price is decreasing and we're not getting congruence of the RSI. It's a bat pattern again, a bull bat in this case. It's between the 382 and the 50 retrace of XA or AX. With a nice 618 plus plus, so just beyond the 618 here for C. This part's fairly symmetrical. From an Elliott perspective, this could be a 1, a 2, a 3. We've got the divergence, so we do expect some sort of correction taking place. If it corrects at the classic PRZ here at the 886 for this bat, it could come up here to a 382 retrace of DC, which will nicely coincide with the upper channel line here on this declining channel. If it breaks that, potentially it could run up into the 50. And it would not be unimaginable for it to come up here to the B point, the last significant structure, historical structure, around the 618 retrace of DC. But this one here, you'd need to go in a very small position. You're going to have obviously for these patterns, you're going to have your stop beyond X, ideally beyond the 113, and so that's going to be quite a wide stop. So your position size would probably be quite small to accommodate the large risk involved in that. So you decrease your risk. You know, it's a good pattern, nice fibs, some confluence of the indicators with the pattern, etc. So you would compensate for the large stop distance by having a small position size. Okay, traders, that's it for this week. Thank you for watching and listening, and I'll have another video for you next week. In the meantime, good trading, and bye for now.